Do you worry about a contagion effect starting with Italian banks?
Well, good morning. It's a pleasure to be with you. Well, I don't worry. I think that the crisis the new political situation in Italy will be managed and the system is robust. Nevertheless, I think that it also sends a note of caution to the European authorities that we cannot afford complacency in the building of a full and complete monetary union. At some point, we have to go on constructing the union so that it has sufficient backstops and sufficient leverage to deal with financial turmoil. It's important that we go on building a full and complete banking union.
But, Mr. Gual, how much of a setback will this be for the European banking union?
Sorry? I couldn't hear you well.
How much of a setback? Yeah, I'll re-say it. How much of a setback, how much of a difficulty will this be for the banking union?
Well, I think that to fully complete the banking union, we need to make sure that national barriers introduced by domestic authorities are removed. But, of course, we face significant political difficulties. These can be achieved, but it would be important that at the same time the Eurozone provides with instruments of risk sharing to all the members of the zone. In so doing, what we will achieve will be a reduction of the level of risk for the whole system. So there's no actually contradiction between risk sharing and risk reduction. The two of them go together. And I think that that's one of the fundamental lessons, I would say, of basic economics that has to be taken into account into policy making.
Jordi Gual, it's Guy Johnson. Good morning. Do you think that the link between sovereign bond markets and European banks has been broken? Because if it hasn't been broken, then I can draw a line between BTPs, bonos, the Spanish bond market, and the Spanish banking sector. At any point, has that link been broken?
I don't think that we have. I mean, the way banking union has evolved has helped diminishing the link between the banks and the sovereigns. But we also have the link between the sovereigns and the banks. That requires a fundamental rethink not only of the way sovereign bonds are issued and traded by the different member states of the Union, but also a rethink of the fiscal framework of the European currency zone. One must not forget that when one country joins the single currency area, is doing something fundamental, which is relinquishing the ability to issue a risk-free asset. Therefore, it must be the case that the members of this single currency zone should be able to issue jointly a shared risk-free asset, which is a fundamental tool in financial systems. And therefore, I think that anything that is done to break the link between sovereigns and banks should be related to the overall framework of how we deal with the budget deficits of the member states, what are the fiscal rules, what are the rules regarding debt restructuring, and so on and so forth. It's something that cannot be just dealt apart.